Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of gold, XAUUSD. Thanks for joining me here. My name is Vic. So gold had a very good week last week. It was a little confusing because it got a little overextended, and it is kind of like, it is trying to reach a level. That's what it is showing, and that has created a lot of confusion amongst the traders because some of them were very bearish, and they are still very bearish, but at the same time the market has been just rising upwards. So in such scenarios, if you are not able to find a direction, or if you do not have a clear idea, then the best way is actually to stay out. So that is my tip. If you are in doubt, get out and stay out. I keep on repeating this all the time, and last week was kind of one of those scenarios. If you were swing trading, if you're day trading, or if you're taking small short-term trades, then there were a lot of opportunities. In fact, personally I was able to take very good trades on gold itself, but from swing trading point of view, there was not much there. There was a lot of confusion. Okay, so next week is probably going to be a little more confusing as well, but we are expecting some direction to be visible to us. So let's see what we have on monthly time frame. What we can see, that market is it has shown us this this bearish signal, and we are still expecting market to come down to this level. And I have mentioned this several times in my previous analysis as well. Market it never goes in straight line. This signal has come in. That does not mean that it will tank directly to this, because the market runs in waves. It goes up and down, right? So what we can see, that market has gone up, fell down, and now it has gone up, and it can fall down to come to this level. So that is a possibility on gold. However, if the previous level is violated, what I mean by that is, let's say the market is creating this sort of wave, and when it is doing something like this, and if it actually goes beyond this previous one, then you do not expect it to fall down further down, right? So far this movement, this target is still intact, because this movement has not gone past the previous high, which is 1960 level or so. So my gold, ideally, if it finds enough momentum, it can go all the way to 1960 here to test out the previous structure here, right? That's one of the scenarios. Okay, so if you are a subscriber of what I envisage, and you're getting confused, I've got this target here, but the gold is moving in opposite direction, always think this is a monthly time frame, and this target is a monthly time frame. That means it may take few months to even years to reach that level. That's quite a possibility. But you should also look at the structure. If the structures are getting violated, then market may never come there, because the market is the ultimate truth. It can do whatever it wants. It does not care about your analysis, because all your analysis, all your systems are just probabilities in the market, leaving some probability for the market to do whatever it wants to do. Okay, so that's what we have on monthly time frame. Some of these levels are very, very important on monthly time frame, and we'll discuss them as well. So let's let's actually go and look deep inside. So let me just quickly do this so that I can show you what I mean. Okay, now one of these levels is actually very, very important, right? So this level, which is right there, let me actually draw Fibonacci on it so that you can see what I'm talking about and why I'm talking about this. So if I draw Fibonacci on this, the next level, which is very, very important right now, is this level here, which is 1899. So that also nicely confluences with 1900. So the market can reach there. If this monthly candle closes beyond that level of this this Fibonacci level confluencing with 1900, then you can expect market to go all the way to the previous structure level. In fact, it can go all the way to this level here as well, which is going to be near about 2000. level as well. Okay, so that is why this 1900 or 1899, that fib level is actually very important, and I'll be able to confirm that in the next week's analysis, because next week is going to be the month end as well, and that is why you have to be extra careful in the last week of this month. There can be lots of ups and downs, and that also means that it is going to be a lot of are going to be a lot of trading opportunities there, but you must manage your risk because there can be sudden movements. Okay, so that is very important. The next level, which is also very important, is this one. Okay, this one is near about 1850 or so, 1850, 52 or so. Okay, if the monthly candle closes below this, which can happen next week, if it closes below this, then we are expecting market to continue and form a bearish candle in the month of June. Okay, so that is a possibility here that we have. So that is why these two levels are very important, and right now the market is pushing towards this upward level here of 1900. It may or may not be able to reach that. I've seen it several times, the market actually goes towards this first level, but it never reaches there and just falls below this 61.8 fib level and then continues to tank after that. So I've seen that several times happening before. So it is a possibility. So manage your trades according to that. Okay, this is what we have on monthly time frame, and there are a few other levels which are also very important, but let's go to the weekly time frame. What has been happening? If you remember, in the last week's analysis, I mentioned I was expecting that market was going to create a bearish candle here, because I was expecting market to fall down and test this water curve water curve here. Okay, this blue line is water curve, which is higher time frame trend, and this also acts as support and resistance, dynamic support and resistance. Now, so I was expecting market to react to it, and this was the reaction which actually happened, but I'm still expecting at least 1 week of bearish candle. So I was expecting that to happen last week, but that did not happen, which is fine. All right, but another week can be like that. It can actually fall back into that. If that does not happen, and if it goes and closes beyond this level, then there will be in fact actually a lot more chances for a deeper correction. So you have to be careful. If next week is not going to be bearish, and if it closes beyond this level here, which is 1909 or 1916, near about that level, then there will be a lot more chances of it actually falling down, because then it will be extremely overstretched. If you see what I mean by that. Okay, so this is what we are expecting here. We are expecting still bearishness on gold, but there can be a temporary bullishness on here, so you have to be careful with that. Okay, let's go to daily time frame. On daily time frame, as you can see, the market is extremely overstretched. This market is very overstretched. This actually came right into this supply level here, and it actually fell down for a little bit, and we were able to take that trade. There were a few trades that I personally took here around here. The last one was on Friday as well, but you see, the market is not trying to, it is not actually giving us any kind of proper correction here, and this is an overextension, and when that happens, you know what's coming. There can be a quick and deep correction to this market, and that is quite a possibility, especially when it is overextending and it is too far away from water curve. That means something is about to happen. Now the only question remains when it is going to happen, and as I said, it can go to the little bit higher to those levels, to those monthly or weekly levels that we just saw. Okay, so this is what we have on daily. On daily time frame, this is looking like very ready to give me a bearish confirmation and early warning on Watt and Visa system. If you are interested in knowing more about Watt and Visa system, then you can find a link below this video, and there is free training available on Watt and Visa, how it actually works and how it actually gives you early warnings and confirmations, and how can you do analysis using Watt and Visa system. So I'm expecting a bearish signal to appear here very soon, and if that happens, then we will look for short opportunities only, because this is also a supply zone and we are going towards the end of the month, and next week we can probably get a bearish confirmation here, or not confirmation but early warning. There was a little bit of bearishness around here, which got violated. That basically means that this the entire move that we see on gold is overextended. And you when we'll go to the charts, then you will be able to see that there are few gaps available here which need to be filled as well, because gold does not leave any gaps. Right now on Friday, when it started to sell off a little bit in final hours, let me actually go to 4 hours and then show you what I mean. Okay, on 4 hours time frame, the market was ranging here, and that gave us very good opportunities, few very good opportunities using our FCP methodology, because there were W patterns here, and when you have W pattern, then you have an M pattern, and when you have an M pattern, then you have a W pattern here, and when you have a W pattern, then you also have an M pattern. So that's why we were looking for. Now personally, I was able to short from here because of this bigger W pattern here, but there is a gap left around this level here, and that is why the market is going upwards here. Now gold does not leave any gaps, like historically it has been able to fill all those gaps. Now it is trying to fill this one, and in that process it can go even higher to 1890, or even higher to one of those levels that we saw earlier on. But that also means that there are few lower gaps available around 1843, I think, and then 1786 or something. So that is a possibility. If the gold starts to move down, then there can be a deeper correction. For now, this is still looking bullish, as we can see here right now, and this is a lot of choppiness that is right there. And if you think that you can trade this, then go for it. If you're in doubt, then stay out. As simple as that. Okay, so this is what we have on 4 hour time frame. Let me quickly go to the daily time frame once again and show you what I mean by 1786. This is the water curve level, and this is where the gap is, and this is overextended, so there can be a correction to the downside. And we know that on weekly time frame we are expecting at least some movement downwards. So if it finds enough momentum, bearish momentum, then it can fall down even further. And we can also see that we have this W pattern forming here, which can lead to the fall. But let's go and look at the charts to see, like, what else we have got on there. Okay, let me show you another perspective of this, which nobody does. Nobody looks into these things usually. So if I go to the not 12 hours, I want to go to 12 month. Okay, now let's look at the 12-month time frame. Gold is bullish, extremely bullish on yearly time frame. That means it is going to go higher. Doesn't matter what's happening in 2021. It can fall down a little bit further down as well, but ultimately this is looking very, very bullish. And if I show you another chart like this, this is how it is looking right now. And so far the market has been pushing higher, and we are reaching towards this first half of 2021. There is 1 month left, so if it can actually turn into a bullish candle as well. If I go to the monthly time frame, still looking bullish. However, there is a channel running here, and the market has just violated that. That's why a lot of people are thinking that this is going to go even higher. It may or may not happen like that. There can be a bearish month or bearish week which can push the price back into this channel. Okay, there is another week left in this month as well, so be careful with that. But as you can see, there are different perspectives that you can play with. One is that on the yearly time frame, this is very bullish. On monthly time frame, it is looking bullish as of now, but as I mentioned before, when we were looking at what I envisaged, this is simply a wave which is happening right now, and that means the market can push down once again. Okay, so that is on monthly time frame. There's another perspective that I can show you is 3 months. Okay, on 3 months time frame, again this is looking bullish, but you see what we have is that engulfing candle here. That means there can be another bearish move on gold. Okay, so that is a possibility. That's what we have got. Now let's go to the daily time frame and bring in the original analysis. Now if you have been following the original analysis, you know that all of our targets have been hit, and we have been able to take maximize most of the profits that we had. These are the gaps which are left. So there is one gap around 8840 level or so, and there is one gap left around 1780 or 1776 or near about that level here. So you should be careful with that. And all of these levels are going to act as support and resistance once again, because they acted as resistance when the market starts to fall down. If it does, then they are going to act as support as well. So this is what we had last time, right? So on 4-hour time frame, if I go there, we were able to take a very good short trade on this, because we were expecting market to go into the supply zone and fall down back into this FCP zone, and this was the move that we were expecting, and that has happened. The market gave us that move and then started to go higher. Now this supply zone is acting as a support zone right now. The market is falling into it, falling into it, falling into it, and then going back up. That means it is trying to go to this 1890 level, and in fact it can go to 1902. Now these levels have not come from what I envisaged, they have come from FCP analysis, but what I envisage and FCP analysis, they kind of go hand in hand as well. If you want to, you can use what I envisage with your own strategy, but it works the best if you do FCP analysis. And these are all the levels. So all of these levels are going to act as support and resistance, and we have already covered majority of that analysis. So what is the trading plan for gold? Now I'm still expecting market to go above, go to that level and close that gap which we have around here. Let me show you that gap if I can on here, right? I think I should be able to see that. That gap actually coincides with what I envisage target here. So I was able to take a short here. It reached the first profit target here, second profit target here. So my position is risk free, and I'm expecting market to reach this profit target here. Why? Because this is blue here. Blue means bullish. Blue means bullish. That means the market is expected to reach this profit target. And let me show you the gap if I can find it for you. It's not here. Let me just, okay, yeah, that's the gap. So the gap is right here. This is the gap we are talking about. So this is around 1883. So the market can reach this level here, which is also, let me quickly put a line here, okay, and remove all of these, and then come down to 1 hour time frame, and as you can see, that's the gap 1883, and what I envisage is also saying that the market could reach there, and in that process this will also create a W pattern. So expect the market to fall down a little bit, because there is a previous structure level here. So there are a lot of trades which you can take, and if you have what I envisage, then you can play it with better control, because it gives you all this analysis ready to go. Okay, now let's go to this chart once again. So I'm expecting market to reach this level here, which is not of very high importance, so let me mark that as that, and let me bring in this and put it here. So there is a gap left here. Okay, so you see the gold has been able to close all the gaps, and that also means that market can actually fall down to these levels to fill these gaps up as well. Okay, so this is our analysis on gold. Hope you enjoyed this. If you found this useful, then make sure you hit the like button, put in a comment, and share it with other traders and trading communities. Do your bit to support this channel. It takes a lot of effort and time to bring you this analysis for free, so keep us motivated by sharing and putting the comment and hitting the like button. And I wish you all the best in the next week. Remember, if you're in doubt, stay out. So you do not have to trade next week. You do not have to trade each and every candle. You do not have to trade every hour, right? Trade only those markets and those opportunities which you are completely confident with. Okay, so I'll see you in the next one. Have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to vikinsa.com, and under training section you'll be able to see core strategy training program. On this page, you will be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vikinsar.com and under training section, you'll be able to see and submit this form.